That was very good. You can read from his bio. As the partner responsible for business services at Rushton, Perry Barnett works with manufacturing, distribution, and construction industries, as well as specializing in international business, tax and estate planning, business formation, and succession planning. Today, he's going to address a critical issue for most, if not all of you here today, the business reporting requirements mandated by the Affordable Care Act. Perry?
Thank you, David. Good morning. Got to wake everybody up kind of mid-presentation here. So, like Rich said, health insurance is becoming more and more a part of what employees are looking for in their job decisions. I would say probably whenever we're interviewing someone and we ask what questions they have of us, the first or second question is health insurance. So, and I think more and more it's becoming the first question because they want to know what the coverage is, and that is a vital part of their employment decisions that they're making. And, we've heard a lot about the health and insurance premiums. They're increasing, and we've got increasing copays and things like that. But there are a lot of other phantom costs that I think employers are going to be responsible for to help them make sure they're in complete compliance with this new law that often aren't tracked that well. And one of them, David, where'd the clicker go? There we go. All right. Some of the reporting requirements, for small employers, and I'm going to use the word employers. I may use the word companies, but employers could be nonprofits, governments, for-profit businesses and things like that, because no one is insulated from this particular act. But just to give a little recap from what we've talked about in the past, there we go. All right. Beginning in 2015, any applicable large employer, which was defined as any employer greater than 50 full-time or full-time equivalents, it had provisions for employers to have shared responsibility. And I don't know if anyone understands what shared responsibility is, but it sounds like a nice term, but it's actually it doesn't sound like a tax, and it definitely doesn't sound like a penalty. And this is not something we're going to go into detail today, but this is what a lot of companies, small businesses, are trying to avoid. These are the $3,000 and $2,000 per employee penalty that companies can incur if they are not offering affordable coverage the way they're supposed to under the Affordable Care Act. But also the information reporting that's required by companies, and this is something, speaking with a lot of companies, it came into effect in 2015, but there are a lot of companies and employers and organizations that really, haven't begun to plan for that. And this particular part of the law began January 15, 2015, and here we are at the end of August, and some of this reporting is required at the end of the year, and is a huge culmination of a lot of activity that has occurred during 2015. So it's getting to where the reporting requirements and the planning around that are getting a little bit more urgent than they've been in the past earlier in the year. But what is an applicable large employer? An applicable large employer is any organization that has full-time employees for any month during the year that have worked more than 30 hours on average per week, or full-time equivalents, which means basically you take all the full-time employees, add up all the hours that they've worked and divide it by 120 hours and look at that month and see how many people you have. And so an oversimplification of this could be, this is an extreme example, but what if you have an organization that has 2 full-time employees and 200 or 300 part-time employees, which that's an extreme example, but in that situation, we could have 2 full-time employees and we could have 200 or 300 part-time employees, and they're still responsible for all of the reporting and everything else under the Affordable Care Act. But again, this is just a recap. Under the shared responsibility health care coverage rules, transition relief is available, and this is where a lot of companies are having a little bit of confusion because a lot of the chamber members are between that 50 and 100 employee size companies. And so under the shared responsibility, which is basically the penalties for non-compliance with the law, under this section of the law, there is some transition relief just for 2015 for the companies that are 50 to 99 employees. However, this transition relief does not apply to the ACA reporting requirements that we're going to talk about here today. And that's where a lot of companies and organizations, I think, have kind of delayed their start in preparation for the reporting requirements that they have at the end of the year, because there was some confusion. They thought they had a free pass for 2015. And you throw that in with a lot of the, as Rich mentioned, all the litigation and confusion and things that are surrounding the Affordable Care Act. Is it here to stay? Is it not here to stay? Should I invest the time and effort to comply when it may not be here? Some of the companies that help support this reporting may not have made a lot of their investment until later in the year, because why would you devote the time and resources to develop software and the infrastructure to do that if the law is not going to be around? So evidently it is here now. As Rich said, it could change depending on what lawsuits and the executive branch and what Congress decides. So, but what information has to be reported, and this is going to be a mouthful, but beginning in 2015, generally an employer, and I use generally because there are a lot of different variations here, but generally an employer with 50 or more full-time employees or full-time equivalents during the prior year has a reporting obligation related to the health coverage of the employer that the employer offered or did not offer to each of its full-time employees. So that can be very confusing, but the reporting actually that the employer has to do, generally speaking, is just for the full-time employees. So I'll go back to the example I said before. What if we have an organization that has 2 full-time employees and 300 part-time employees? Well, this particular act applies to them, so they do have reporting requirements at the end of the year, but they may only have reporting requirements for those 2 full-time employees. So, this sounds fairly simple, but there's a lot of evaluation that has to go on, because we're in 2015, and we'll go over in a minute what some of these reporting requirements are. But to determine whether someone is even affected by the law, they have to look at what their personnel structure was for the prior year. So if we're going to look at 2015 and begin to accumulate records, we might have to accumulate very similar records for 2014, a year that is already passed, and who knows whether we have access to the data that we need to do that, to see if we even have reporting requirements this year. The reporting requirements that employer organizations have, like we said before, are for each full-time employee. And the form, don't get hung up on form numbers, but the form is going to be a 1095-C, and I'll show you the form in a minute. And if you think of this is very similar to how a company would have to accumulate information for a W-2. All of us receive a W-2. In the old days, before they were a full page, they were just a short piece of paper, had about 6 or 7 boxes of information on there. You wouldn't think that would take a lot of work, but if you ask someone in human resources or payroll that is producing W-2s for 100 or 200 employees that work by the week, by the hour, overtime, full-time, part-time employees in there, it's a lot of work just to prepare that small form at the end of the year. And so now employers have another form that they have to prepare, and it's kind of like a W-2 on steroids, because it's not just one form for the year, but it's one form for each month of the year. So the data that has to be massaged and captured beginning January 1st, 2015 is by the month. And it incorporates the hours that people work, the pay that they received, and then also has to be compared to the employee's cost of the health insurance. So at the end of the day, is the insurance affordable? So, at this point, if a company hasn't started today, I think it's fairly urgent to begin as soon as possible, because it's not something that can be just turned around in December or January at the end of the year. Most employers will only have to complete parts 1 and 2 if they are just a large employer of more than 50 or more full-time employees or full-time equivalents. They only have to complete the first 2 parts. But as we'll see, there's a lot of information that has to be massaged just to complete those. The one caveat, though, is if an employer offers an employer-sponsored self-insurance or self-insured health plan, then they're in the shoes of reporting the information that an employer would normally report, but also the information that an insurer would report to the employee. And this is all the information that the employee needs to prepare their tax return, to see if they qualify for the premium assistant credits and things like that, which is a vicious circle, so that the IRS can see if the employer did what they were supposed to do, or should they be assessed a penalty. But with the self-insured, there are a couple of nuances where basically with the regular reporting that an organization has to do, we're only reporting information on the full-time employees. But if the company is self-insuring as well, they also have to give this information for any employee, because at the end of the day, this information, the health care coverage piece, which I'll show you in a second, applies to any employee. And since the employer is self-insured and they're considered the insurer, then this information has to be prepared as well. But these deadlines are very similar to the current payroll taxes and W-2s that have to be prepared now. Basically, they have to be issued to the employee by January 31st, just like a W-2, and then the company has until the 28th to submit their package to the IRS, their copy to the IRS or the federal government. So there's not a lot of time, and so this is, I would say, the fourth quarter of the year is the time to scrub the records, to plan, to make sure the data is available, to look through what is required on this form. And here's a copy of the form, and I think you have one in your handout as well. It's, on its face, it looks fairly basic. The employer is going to complete the part 1 and 2 if they're not a self-insurer or they do not have a self-insured plan. If they are offering a self-insured plan, then they will complete part 3. And the reason they're doing this particular form, 1095C, there is a brother-sister form that would be provided to an employee with the insurance coverage information only. And since the IRS is trying to be nice here and say, okay, instead of you providing 2 forms if you self-insure, just use 1. But you can see the part 2, I think, is where from a payroll administration and benefits record-keeping administration could be a bear, because you can see the things that you have to be able to complete. Like line 14 is, how was the health care offered? Was the health care offered? Was the employee's cost lower than 9.5% of the national poverty level? Was it lower than 9.5% of W-2 or pay rate? All of that information has to be in there. And it does have a column where if all the 12 months are the same, you fill out the far left column, which is all 12 months. However, I haven't seen many health care plans that begin on January 1st and end on December 31st. Usually there's mid-year, so there's always some transition. So could have people that began work in January, worked in February, did not work in March and April, but worked the rest of the month. So a lot of this information has to be, you have to make sure your payroll system actually captures the information necessary. And again, we're having to look back to January 2015. Now, the next form, if an employer is offering a self-insured health plan, and they have less than 50 people, then the 1095B is what has to be prepared at year end, and it's basically just has the health care coverage information, the lower part of the 1095C, and again, it has to be issued to the employee by January 31st and has to be filed with the government by the 28th. So this form is very similar. It just doesn't have the information at the top. It's just providing health coverage information so that the employee can do what they need to do. So again, I can't stress enough, this is capturing a lot of information to prepare these filings, and there are a multitude of ways to do that. A couple of things you can do to keep this information is, you can do it manually. And if anybody's familiar with 401ks or employee benefit plans, the testing that's involved with discrimination and those kinds of things, this would be basically the equivalent of taking a 401k plan and using an adding machine and a spreadsheet and trying to do it yourself. I mean, it's extremely difficult, but it can be done. And I would say that a company can use manual record keeping if everyone's on salaried and everyone has the same benefits, and it's very easy to track. But if there are a lot of part-time employees and things like that, and you're having to calculate full-time equivalents, and that can be very, very difficult to do. Automated computer software, as I mentioned earlier, is kind of hard for software companies and organizations to kind of get excited about investing time and money into supporting this process when the act has been in flux for 2 years. And so now there are not many companies out there that actually provide this kind of software, and some of it's quite expensive. But when you look at it, it can be a bargain compared to the time it would take and the risk for error for someone trying to do it manually. But there is some software out there. This is nothing scientific, no Kaiser research study or anything, but kind of our prediction is probably in about 2 to 3 years, most of the HR or payroll software will have this built in just like they do with the payroll withholding tables and things like that. But right now that is not the case, and I would say it may be the case as early as 16, but probably 17, because it takes a little while for that to roll out. And a little bit of competition in the market will bring some of the costs down, because this can be quite expensive to accumulate and make sure that this is managed properly. Third-party payroll services. Third-party payroll services, the larger ones are doing this, but they've already put us on notice that they're full. So if someone has not signed up for their service to do this, then they probably will not be able to take on any more. And even some of the software companies that are offering this have given deadlines within a couple of weeks that they will be full as well. And so any organization that needs this assistance needs to act now and try to find someone to help with them. Insurance providers may be helping as well. Since the base of this information is payroll related and HR, that's usually where it starts, but insurance providers, especially if they're self-insured, may do it. Some industries, trade associations, because that industry is so specific in how it does its record keeping, the trade associations are offering some assistance in doing that. And then a host of other ways. But I get clients ask me all the time, they wanted an analysis of if they did not offer health insurance and just paid the penalties, would that be cheaper? And of course it's not. But the penalties for this can be up to $250 per 1095 to the employees that aren't issued and prepared and submitted with the IRS. So, so this is something that is not to be taken lightly. And it's probably something that we have to hear about 3 and 4 times to make sure we have a good grasp of it, to make sure that we're reporting the correct information. With that, thank you for your attention, and hopefully this has been helpful, and hope you enjoy the rest of the program.